Welcome to another episode of the 813 Exchange, and today we have Jake Grosser. Pleasure to have you on the show.
Thank you so much.
Jake is a mortgage broker, and he has started his group FLOW Tampa, which is an acronym for the love of watches. So super excited to have Jake on the show today, get into the mortgage business primarily, but then be able to talk about FLOW as well. So Jake, it's a pleasure. How long are you in the mortgage business now for?
So I've been in the business since I graduated college, around 4 years.
Mm-hmm.
Yeah. And I kind of got into the business. I have a family member who's been in the business for 30, 40 years. And that's how I kind of really got into the business. I didn't really know what I wanted to do. I graduated at USF.
Mm-hmm.
I'm born and raised in Miami. So when I came to USF, didn't really know what I wanted to do. I was a communications major because I felt like that was my strong suit, just talking to people, connecting with people, networking.
Mm-hmm.
My uncle was always, say, listen, get into the real estate business, get into the mortgage business. So he worked for a company. He was the vice president of this company called Caliber Home Loans, and they had a program called Caliber University. So, getting kids right out of college, of course, to kind of dive into the mortgage business. So I started with that, passed my mortgage exam, and then jumped right into the business, and it's been great, ever since. Love it.
Yeah, definitely. So getting into this business, obviously you had a little bit of a family influence. So when you went to USF and you had experience living on both coasts then, because I had experience living on both coasts as well. I actually went to school on the other coast first and then I went to University of Tampa. So deciding between both coasts, why Tampa over the opportunity to be in Miami?
So the honest answer is I didn't get into any other colleges.
Okay.
So I didn't really know anything about Tampa. I had never been. Of course, I would love to stay in Miami, but when I started applying for colleges, I applied to UCF, FGCU, and USF.
Mm-hmm.
I think I got accepted into FGCU. I visited, wasn't a big fan, even though Fort Myers is a beautiful area.
Mm-hmm.
I didn't get into UCF in Orlando, and I got into USF. So I was like, let's go take a trip up to USF, take a look at Tampa. And it kind of gave me like a very small Miami vibe, like
Mm-hmm.
downtown and Water Street, even though Water Street wasn't even a thing, but you had the lightning there.
Yeah.
And it was still like a very, there was still something to do in Tampa, and it wasn't just revolved around USF. USF's a little bit more north, so it still had a downtown, which I love. I'm a city guy. I love living in the city.
Mm-hmm.
So when I came to visit, I was like, let's do it. Let's try it here, and I loved it.
Yeah, don't you live in the city now?
Yeah, I live downtown.
Okay, yeah, no,
It's great.
it is a great area. It's funny. It's like my family, like we've been coming here since we were yay high because my dad's always had family in St. Pete, and like we go to Florida Aquarium when we were like little kids, and it's like downtown's evolved so much since like I was 6, 7 years old.
100%.
I mean, it's a new city.
Definitely.
Yeah. So actually, one thing I wanted to ask you, it was like something I was thinking about before we were doing the show, is like Tampa, Hillsborough, and Pinellas are like so different with like kind of like how they allow those short-term rentals. Do you know what that is? Because somebody was trying to explain to me and I didn't really understand it.
So honestly, I know that they have a lot of regulations closer to the beach about that. I have a real estate agent, I'll plug him, Sean Van Grau on the Brescher Group.
Mm-hmm.
He does a lot of short-term rentals. That's kind of his like niche. And he always would be like this, oh no, Jake, this place we can do it, this place we can't. But of course, over here on the Tampa side, we don't have that regulations. I honestly have no idea why by the beaches it's like that. But I do run into problems all the time where my client will even be under contract on an investment property or looking to rent it out Airbnb or maybe long-term rentals, and then they pump the brakes and say, hey, you can't do that.
Mm-hmm.
So it's drawing a lot of people honestly closer to Tampa.
Yeah, no, I definitely understand that. And do you think, what percentage of your clients or people that come to you are looking for a mortgage for the sake of something that's going to be a short-term rental versus like, hey, this is like the family home?
Yeah, honestly, it's a great question. I would say 75% of it is the primary residence that they want to live there. They live there for a couple of years. They want to raise their family there, or maybe they're relocating from somewhere else.
Mm-hmm.
And then 25% of it is investment properties. It's because I have a lot of very unique loan programs that don't even look at income documents, which is very, I know pre-2008, a lot of people get a little nervous. Like, what do you mean you're not looking at income documents?
Mm-hmm.
But we're looking at the potential rent of the house or of the condo or whatever, and that's what we're qualifying them for. So it's called a DSCR loan, and that's where I get a lot of my investment clients from, just because it's such a unique program where we're looking at the property's potential monthly rent.
Yeah.
If that covers the monthly mortgage, they qualify, no questions asked.
Yeah, and I think like from my experience on the commercial side, I've noticed that's like where a lot of lenders' heads are at is, you know, we don't care that you made $175,000 last year. We want to know if you're going to put up this car wash, self-storage, multifamily. You know, if the mortgage is going to cost you $500,000 a year, we want you to know that you're earning $1.2 million a year,
Exactly.
right? Like for me, like how I modeled it financially is like I knew like when I started searching for properties, it's like I wanted to take my pro forma, which is like financial revenue projections, and I want to say, okay, if we were to whack 20% off of our earnings and what it costs to build this out is going to be 20% more, the number still makes sense then, and it makes sense. So I really looked at it like with the lender's eyes, because I know I want to be above a 2-to-1,
Yep.
you know, debt service coverage.
Exactly.
So,
Yeah. You know the business.
and I think that it's important because I think a lot of people are intimidated saying, oh, like, a lot of people came up to me, they're like, how are you ever going to get financing? I'm like, it's actually like not as hard
It's not.
as people think. Like, it might be intimidating, you know, whether it's 60,000, 600,000, 6 million, it might be intimidating, but like, you know, if you're able to show why this property is going to produce these numbers, and even in, you know, if hell freezes over, it's still going to work. I think a lot of lenders are willing to do the deal.
Definitely, absolutely. I mean, listen, the lenders are making money on, you know, on the deal too. So they're investing in you. They look at the pro forma. They say, listen, this is a great idea. Let's do it.
Yeah, no, and the thing is like from the operator standpoint. So like if I came to you and I said, okay, I'm going to find a short-term rental, like, you know, you always want to be looking at it super conservatively.
Of course.
You know, because at the end of the day, you are putting some risk on the line. So you just want to make sure, like, if you're doing it, you know, you're marking down your numbers a little bit. And you're also making sure that the people that are giving you, like, pro forma revenue projections have a track record of being consistently successful with them or accurate. And, like, what I did with the car wash space was I took it to some people and I said, okay, let me go to, like, 10 you know, operators that have opened a car wash before and see what they got in their revenue projections versus their actualized. About 5 of them told me like, that's none of your business, right? I mean, that's gonna happen. But the other 5 were super open about it and they're like, here it is. And I saw people doing about 15-20% better or more. So I was like, okay, like I know like it gives me a little bit more trust to say, let's do this deal from the operator standpoint. And then to be able to give that to the bank, you know, it gives them even a lot more trust. So super important thing is knowing your numbers before you get involved in this.
Absolutely.
So a couple areas in Florida, you know, we're in Hillsborough County, but obviously we have Pasco, Pinellas, and Manatee around us. Where's a lot of your action coming out of?
It's a great question. So my license covers all of Florida, and of course, being born and raised in Miami, I still have a couple of real estate agents down there that send me a little bit of business. But honestly, I'm all over the place. I would say 50% is focused in Tampa, and then the other 50% is scattered all across Florida. So a little bit up north, down south, you know, the whole 9 yards. So
yeah, no, definitely, and it's an interesting business. So, like, how can somebody listening to this right now, if they're like, hey, you know, I know nothing about the mortgage business, what would be like your first 3 or 5, however many steps that they should take to put themselves in the right direction?
it's a great question. First step, of course, is getting your license, right? Just from a legality standpoint, if you are serious about it, you know how it is in real estate exams. Mortgage exams is very similar where you're not learning a lot of the stuff that you're really going to use in the outside world. It's more, you know, logistics, laws, and things like that. But step 1 is getting your license, and then step 2 is finding a good mentor, someone who's been in the business for a long time, can teach you how to structure deals, you know, answer any questions that you have. I had a great mentor when I first started, and he taught me a lot. You know, he taught me how to go and find business. He taught me how to structure deals. He taught me difference between different programs. So getting a good mentor is extremely, extremely important. And then third, I would say, is get out there and network and meet as many people as you can. Connect with as many people as you can. I'm a chatterbox, so I talk to everybody. I don't care who it is, in line at McDonald's or at a networking event. You know, I'm talking to everybody because you never know how someone can, you know, potentially impact you or maybe connect you with someone that they know that might be a good fit for you. So I think those are the first 3 steps: license, mentor, network.
Yeah, no, definitely. So licensed mentor network. What from like I guess just the actual business of mortgage, like what's like the top thing like I should know, like say let's say I got all these things, I got a good network, how do I explain my products to customers, I guess is what I'm trying to ask. Like how do I know what the right product is for them?
Great question. So a lot of people think that I don't directly go after the people that are buying the houses, right?
Yeah.
I'm not going after the end consumer. I'm going after real estate agents that then send me their clients. They're selling houses all day long.
Yeah.
So I could connect with someone, potentially do their mortgage, but person's in their house between 5 to 7 years. When's the next time that they're going to use me? Probably not for a while. When on the other side of the coin, real estate agents are consistently selling houses and consistently needing a good mortgage broker. So that's where I get all my business. But on the product side, it all depends on what the client wants to do. If they're looking for their forever home and they're looking to be there for, a number of years, obviously we're going to do a primary residence. We're going to take a look at their full file. Of course, I need to do my application. I need to do a deep dive into credit score, income, any debts that they have, kind of get a good picture of their full file. I like to be very, communicative with the person that's buying the house. I'm on the phone with them, going through their application, making sure that they're, on a step-by-step process, the same as that I am. As we're communicating, we're going through the whole entire process, and it all depends. There's so many different programs out there. It depends on the person's financial, situation that they're in, but majority of the times I'm doing a conventional loan, primary residence, 5% down, very basic loan.
So really it's like you can, if you're looking to buy a home, you can go as low as 5% down.
Even cheaper. So if you're a first-time home buyer, you could do an FHA loan, 3.5% down.
Yeah.
It's a great program. A lot of people are, very hesitant about the FHA. The difference between FHA and conventional is that conventional, you have mortgage insurance until you reach 20% equity.
Mm-hmm.
When FHA, you have mortgage insurance for the life of the loan. So people get a little bit nervous about that, but in the market that we're in right now, in the rate environment that we're in right now, whether you pick conventional or FHA, I'm going to refinance you in 12 to 18 months regardless, right? The interest rates are a little bit high, and we, of course, foresee that they're going to come down. So if you pick an FHA loan, I'm still going to refinance you in 12 months, and if you pick a conventional loan, I'm still going to refinance you in 12 months. So might as well utilize the FHA loan, low down payment, extremely low interest rate, a full point lower than my conventional. So let's say I'm at a 7% conventional right now, I'm at a 6% FHA. You're paying mortgage insurance for the both of them, honestly, for the first couple of years. So might as well start out with FHA, and then when these interest rates come down, refinance them into a conventional mortgage, and then that mortgage insurance drops off at 20%.
Yeah, so if you're going to refinance somebody, like let's say I'm coming to you, I'm like, hey, let's get this deal done. I like this home, but I know in 18 months I want to refinance. Like, do you let those people know, like, hey, like there might be additional, like just set some cash aside because there's gonna be additional like doc stamps and like stuff like that, because then you got to redo, like I'm going through the process of that now, and I'm not refinancing, but I just added a holding company, and they're like, oh, we got to redo all this stuff. I'm like, it's a little overkill.
Yeah,
but
there is, of course. I always let everybody know that there is going to be a little bit of a cost associated to refinancing. But I always tell a lot of my clients that if you do the purchase with me, I'll take some, fees off of the refinance. I can roll a lot of those fees into the mortgage, so it's not going to be that much cash out of pocket for you on the refinance. So there's a couple benefits that if you do the purchase with me, I'm going to take care of you on the refinance in 18 months.
Yeah, no, definitely. And, what's interesting too is what I was, we were talking about before the show, in commercial, they like pre-penalize you for refinancing.
Yeah.
And usually, like, my loan is just an SBA 504 loan. It works like 5, 4, 3, 2, 1. That's the amount of points they penalize you, and it goes down throughout like 5 years. But it's a different perception, because I think when people are getting into residential, like, we talked about, like, mom and pop and 2 kids are going to be there for life, right? Or decades.
Oh yeah.
So it's a lot different. So speaking about those loan products, so FHA, you ever do any VA loans for any guys?
That's the best loan ever. I mean, 0% down. The credit score minimum is very low. Interest rates are phenomenal. VA, I've done a couple. I would say maybe 10 within the last 4 years. They're great loans, and the whole mortgage industry really revolves around veterans when it comes to VA loans, that they take care of the veteran. I've had a deal, for example, that the appraisal came in a little bit lower, and this was the first time ever that an appraiser reached out to me and said, hey, since this is a VA loan, we'll give you a second look. Send us any comps that you think, are reasonable, or why, they'll give you a second look at it, which is great. So yeah, I love doing VA loans.
That's funny. I remember I got like the dirt appraised a year after purchase, and I went after the appraiser. I was like, this is bullshit.
Right, what's going on? Yeah.
Like, I got a lower number, and what I did was and it just so happened to be the next door property that I took, which I was looking for a recent comp of a sale, and it's like, residential's a little bit different, but I'm going price per square foot.
Yeah, of course.
But also this is why it's different than residential. It's I also have to make sure that price per square foot is based on the same zoning.
Correct.
Yeah. So
a little different in commercial, but
yeah. But I was able to do that, and they're like, "Oh, you're right," and they reappraised, and the number was a lot higher. It was
Great.
13% over what the purchase price was, and before it was 5% lower. So I was just I'm happy they took that, because it gave me more equity down at the bank when going into the SBA loan, because I went from a bridge note to the SBA note, and I think we were talking about that at that time. So what do you want to do going forward? Do you want to stick with just keep residential rolling, or do you want to venture and do more commercial, or is it kind of a as it comes, but it's a lot type of thing?
That's a great question. I've honestly been thinking about it a lot. I love residential. I love the mortgage business. I think end goal, or start to transition maybe a little bit later into my career, into hard money private financing. I love that portion of the business. I have a family member that sold his business many years ago and does hard money and private financing. He'll loan on residential, but business purpose, so investment properties only, no primary residences, and then on commercial. I like that business a lot. I think it's very cool. It's very quick. It's not cheap money, but it's very convenient money, and you can help out a lot of people. They do cross collateralization. If you have a piece of property that you're trying to pull equity out and you need it yesterday, you reach out to hard money private financing stuff. So I feel like that might be a good segue for me later down in my career.
Yeah, no, definitely. And those move a lot faster than what was I going to call it, commercial loans, because commercial construction loans, it's a nightmare.
Yeah.
You're going through you're pretty much like a project manager. You're going through surveying, engineering stuff, and you're vetting out construction material, and you're sending a crew there to site. It's a lot. So what you're proposing is definitely a lot more efficient.
I agree. Yeah. I like the personal aspect of lending, especially on the residential. I like talking to people, networking with people, connecting with real estate agents. I love doing events. I throw some events myself. So I like that personal aspect of the business.
Yeah, no, definitely. So personalized aspect of the business, doing events. We just brought up FLOW in the beginning of this. Tell the listeners about FLOW and why you like doing it, and why you even thought to do it.
It brings me so much joy to talk about FLOW, and I really am very passionate about it. So it's a long story short, born in Miami, you can go see a nice watch anywhere, right? On all the corners, you can go see an AP or a Richard Mille. And when I was younger, my mom was in the jewelry business a little bit, and there was jewelry exchange right where I lived, where similar to New York, you got a bunch of booths in there. The guys are bartering with each other, throwing watches, throwing cash. I love that side of the business. And then when I moved to Tampa, there's no such thing. You can't go, if you really wanted to buy an AP right now, you couldn't in Tampa. And I think that's a gap in the market. So getting into the mortgage business, networking with a bunch of different real estate agents, financial advisors, high net worth individuals. Of course, a lot of those guys love watches, so I talk to them, where are you getting your watches? Oh, I gotta go to fucking Miami, or I gotta go to New York. I'm it's so terrible that Tampa doesn't have that yet. And I wanted to throw an event because my book of business was starting to grow a lot. And I'm like, what could I do? I didn't want to throw a real estate event. Real estate events, you get 20, 30 people, they come for the free food and drink, and then they're out of there. It's real estate agents talking to other real estate agents. What's the good in that, right? So I wanted to do something clever, bring a lot of the guys that I was networking with together in one room, and I'm like, let me call my guy out of Miami and see if he can bring some watches to Tampa and we'll throw an event. So he said yes. We threw the first event. This was like 2 years ago. We did an American Social, very small. I mean, not small, but we had 80 people. It was great. You know, a lot of my real estate agents, financial advisors, some of the high net worth attorneys that I, networked with over the past. And it was great. Got a lot of good feedback. My watch guy did great. He sold a couple pieces. Everyone loved it. They saw a bunch of watches that they would normally never see in Tampa. Second event, I wanted to bump it up a little bit. I had a little bit of help from a company called Surroundings Group that helped me kind of run it. But we went big. We had like 300 people. I had a watch guy come with like $4 or $5 million worth of watches. There was 10 million in cars. We did it at Paddock One, the exotic car garage.
Yeah.
Shout out to Sean Murphy for allowing us to throw the event. That's where our next event is actually going to be hosted because I think it's just the perfect venue. But yeah, we're doing another one March 6th. I got a watch guy, Jiggy the jeweler, Gigante and Gigante Fine Jewelry. He's actually up north, Chicago guy. Mm-hmm. And he is coming, he's coming with the most ridiculous pieces ever. We're talking a couple $1 million worth of watches. Of course, we're going to have the cars, open bar, cigar roller, the whole 9 yards. And it's really been great. I do the event completely free. The tickets are free. I raise sponsorship money just to throw the event, but everyone loves it. I get a lot of good people together in one room. They look at the watches, they see everything, and after they look at these amazing watches, they connect with all these people. What do they stop talking about? Real estate. And that's of course why I love throwing these events, because it does draw a lot of mortgage business, a lot of real estate business, and it's been just an amazing journey of how we've grown from an 80-person event to this next one should be a couple hundred people.
Yeah, no, this is gonna be cool. I definitely want to come.
Definitely, yeah. I gotta send you the link for the tickets.
Yeah, what did you do, like Eventbrite?
Yeah, I just need Eventbrite. Yeah.
So like, how does that work? Like, Eventbrite, everybody puts in their thing. Do you have like a back office for it that just has everybody's name?
Yeah, Eventbrite honestly is great. So I started to realize that the data that I'm collecting is very important. I think on the first one I kind of just like threw the link out there and I was like, it was my first one. Please, everybody come, whoever you want. Then the second one, I got a little bit more calculated with the help of this company, Surroundings Group. They're like, data is very important. You gotta start collecting data. So now, when I send you the link for the tickets, I'm the only one that sends out the links. I don't broadcast the link anymore, just because I want certain set of people there. But it asks first name, last name, email, phone number, and then what do you do for work? Your occupation? Do you own any luxury watches? Who invited you? That kind of thing. So.
Yeah, no, definitely. That's super important, especially like, I have my own like Excel sheet of people, like I got to keep up a network, because like I don't, like if I have spare time and like let's say like it's Friday and it's like 1 o'clock and whatever, like I'll reach out to people in my network and just ask them how they're doing.
That's so
like
fun.
And stuff like that, because like I know if it's like 30, 50 people, it's I can't wrap my brain around that. It's like It's like you. It's like who do you like? If you didn't talk to your network, who would you talk to on a daily basis?
Exactly, yeah.
Fiance, mom, dad.
That's it, yeah. But I have a really good CRM that,
I
I have a list of guys that I have to keep on top and set reminders. Hey, reach out to this guy, and I'll do the same thing that you do, If I'm bored, I'm just going through the contacts. Who haven't I spoke to in a while? Look at the CRM, call this guy, what's going on? Just shoot the shit with him, and throwing these events are great because it gives me a reason to call them and be like, hey, how's everything going? Joe, did you know I'm throwing another watch event? And these guys love it. They're like foaming at the mouth. They're like, oh, he's bringing more watches? How many people can I invite? Can you tell him to bring this watch? Because I've been looking for it for years. So it's just a great way to get everyone together in one room.
Yeah, and I like to do that too, like, very casually, because the number one thing that I hate and I cannot stand, and I will not do business with people like this at all, like, I don't care how good your product is like, if they're the type of people that it's like, when this person reaches out to you, they're asking you something. Exactly. Or they need something, or they're trying to sell something. It's like never, like, it's only transactional. And it's like, if you don't build the repertoire with that person, like, anybody that's ever, when I say invested in me, I'm not even just talking about the car wash, I'm talking about as a.
If you guys are trying to reach me and want to connect with me further, you can find me, of course, on Instagram, Jake Florida Mortgage, or go to my website, jakegrosser.com. Specific ways that they've got to see something in me, So I really try to build a really genuine connection with a lot of these people.
Yeah, no, definitely. And, one thing I want to go back to is just thinking about the situation of people that continually move here. A lot of people thought this would slow down over COVID, never happened. Mm-hmm. It's coming and coming and coming all the way down here, from a lot of northern states. If a person does come down here, let's say, and you said you want to get business from realtors, but let's say I knew somebody coming down here and was looking for a home, can I skip that realtor's preferred lender and say, I'd like to introduce you to my friend Jake?
Absolutely. So a lot of, even my real estate agents, they'll get a client that comes to them and say, oh, I have a lender. But you know how that works. Not a lot of lenders are doing, collecting the documents up front or setting a genuine pre-approval. So a lot of my real estate agents will go, listen, that's fine that you have the lender that you came to me with, but I also want you to talk to my guy Jake because they know I'll get the job done. But yeah, you can. So in the lending business, you can switch lenders all the way up until closing. It's not like a real estate agent where you have to sign the buyer broker agreement nowadays. Mm-hmm. You can switch up on your lender. You definitely can. You can always shop. They encourage shopping, mm-hmm. To get the best interest rate. And that's where I think I do really well is because I'm pretty quick. Speed kills in this business. So, if I have a client that's like, listen, I'm already pre-approved with this other lender. We're closing in 15 days, but my real estate agent told me that I need to reach out to you because your interest rates might be better than who I'm with right now. So I say, absolutely, do my application. I send them numbers immediately, and I'm like, listen, if you like these numbers, switch over to me. We'll order the appraisal. We'll get the ball rolling, and I'll get you to the closing table. So speed does kill. But yeah, to answer your question, you can use whoever you want to use in the lending process. You can reach out to 5 different lenders and say, hey, the best deal is who I'm going with.
Yeah, no, definitely. So, thinking about your application, what are and I guess it depends what loan package you're mm-hmm. utilizing, but what are you seeing requirements wise for closing? Let's just say it's not a fix and flip property. It's somebody's moving out, somebody's moving in. Mm-hmm. What do you see closing requirements wise, that they have to get done to satisfy the lender? Because I know in some counties it's different, and it's a little bit of a pain in the butt sometimes to get done in a short time frame.
Definitely. Yeah, you got to be quick. So income is the most important part of the mortgage, mm-hmm. process. It depends on how your, income is broken down, but let's just say normal W-2 employee, right? Mm. Maybe they've been at the same job for a couple of years, or maybe they just switched into a new job, but they've been a W-2 employee but never been self-employed. I need 2-year tax returns, I need your last 2 pay stubs, and I need 2 months bank statements showing the money that you need for your down payment closing costs. Closing costs can vary from $9,000 to $15,000 depending on the loan amount. And then credit score. For FHA, it's 580 plus. For conventional, it's 640 plus. Yeah. And then, of course, the debt to income ratio plays a big part. When I pull your credit, all your debts come in. So a lot of people think, listen, I make $100,000, but there's a difference between income and mortgage income. Mortgage income is how much money you make subtracting your debts. Yeah. So your full nut that you walk away with after all your bills are paid for the month, and that's a number that I qualify you. And just for very easy basic terms, you have to double your mortgage payment monthly. Your mortgage income, you need to double your monthly mortgage payment.
Yeah, so I think a perfect example of that is somebody makes $15K a month, but let's say after they spent some stupid crap.
The 2 cars, the boat, and the ATV, and it's $14,000 worth of debt a month. Their mortgage income is only $1,000.
Yeah.
So a lot of people are like, "What are you talking about? I make so much money." I go, "Yeah, but you have 5 cars that you make monthly payments on. You have a house up north and XYZ, and I break it down to them, and they go, "Oh, it makes sense."
Yeah.
And then that's where you can flip it though, and it's really good that I have all these different loan programs because I can say, don't worry, we don't have to use your tax returns or your income to qualify you. We could do a bank statement loan, we could do a DSCR loan, there's a lot of different options.
Yeah, so I'm sure you get a chunk of people that come to you and they're like, crap, I'm really not financially responsible.
Yes, well, absolutely. They go, when you pulled my credit, what was my score? And how much debt do I have a month? And I say, I'll send you the report so you can take a look at it. But maybe you gotta
Yeah, like,
go through it with the wife, and maybe cut some of this stuff out,
Yeah. I mean,
Yeah.
listen, I'm frugal. I go through it once a month. Like there are materialistic things I like, but it doesn't outweigh how frugal I am.
Mm-hmm.
And I'll go through it once a month and be like, it's like they have like Rocket Mortgage made the app, Rocket Money.
I use it all the time.
I use it all the time too. I'm like, I need to know what I'm expensing and like what went to where.
Subscriptions that I forgot about from 2 years ago that I signed up maybe to watch one show. I mean, it's a great plug for Rocket Money or whatever it's called. Great company. I use it all the time. But I also get that I want to mention self-employed people, right? They can manipulate their taxes a lot. So I have someone that comes in a Rolls Royce and a Rolex on, but then when I look at their taxes, their company's making a $50,000 loss.
Mm-hmm.
I'm like, oh, listen, what are we going to do here? And I have a bunch of different programs. Of course, we can do bank statement loans, DSCR loans to get around that. That's where you I do those a lot. Cash out refinances, and sometimes I do it for debt consolidation. Maybe they want to pay off a lot of that debt. They got a big chunk of equity because they've been there for 20 years. I can do those too.
So would you say the difference between cash out refi and a HELOC? It's like a HELOC, like they're not technically immediately taking the equity out of your house. It's like you're just borrowing against it, and if you don't make those payments,
exactly. So I always explain to my clients that it's like a credit card on your house, right?
Yeah.
Let's say I give you a $100,000 line. The interest rates are high right now, 9.5, 10.
Yeah.
So you don't have to use it if you don't want to. The interest rate's only going to apply to the money that you do use, but some people are like, no, I want $250K cash in my pocket after this closing, and that's when I would do a cash out refinance.
It's funny, and like I don't know if it's like anybody could ever pull this off in residential. Maybe they have, but like in business, like let's say like a guy opens like 10 restaurants and he has like commercial mortgages on all of them. And then he wants to bundle up the loan, refinance out of it, and just put one loan over his total company. It's like, has anybody had like 3 homes and be like, yo, wait, let me just one mortgage over 3 instead of dealing with 3?
No, you
can't do that.
I don't think you can do it in the residential world, honestly. I've never had it, but I have people on the hard money and private financing side say, hey, I have 3 homes, I don't have any mortgages on them, and I'm trying to buy this commercial building for $10 million. All my houses are collectively worth $10 million. Can you loan me against all 3 of those? So we'll bundle all those up and loan the cash.
Yeah, I was about to say you definitely could get you definitely could still put them all into a holdco and borrow at the holdco level.
Of course.
So there's definitely ways to get creative with that, especially on the investment side and the Airbnb side. What do you see more of though? You see more when it comes to buying as an investment piece? Are people coming to you saying, like, I don't want to deal with all that Airbnb work. I just want, 1 year lease or 18-month lease. Or are you seeing more like, hey, I want to play the Airbnb game?
So honestly, a lot of people come to me first wanting to do the Airbnb game, which it doesn't matter to me. After they close, they can do whatever they want. But they come to me, I think, wanting to do the Airbnb game. They start doing a little bit more research when they purchase the house and see how much comes with that Airbnb game. And they're like, I'm just going to do a 1 year lease to, this person and eventually get into the Airbnb. Because I know it's a big operation, to run an Airbnb. I have a really, really good friend who has a bunch of Airbnbs. And it's a full-time job, it's a lot.
Yeah, no, you're definitely, it's like you got to look at all those homes and the issues that come with them. It's like your employees, and you got to think about like if you have turnaround, cleanup crews and stuff. Those are like your employees. So you have to have a huge access pool now. Exactly. Now you're managing vendors, so you're definitely like running a company. But with homes, it's like, do you want to do that? Might make sense for somebody that can be full-time with that.
Yeah.
Probably doesn't make a lot of sense for a guy that's running an excavation company or a guy that's running whatever type of business where he's like, I'm in the office 60 hours a week. Like, I don't have time for that.
Exactly, yeah.
So, yeah, definitely an important piece. But, Jake, pleasure to have you on the show. Pleasure to learn more about the mortgage industry and the passion for the watches. And look forward to continuing to see you grow and coming out to the event.
Thank you so much. Appreciate it, man.
Pleasure.